Are you ready? All right, everyone. We're going to get started with our panel. We have a very exciting panel of 7 members today that represent different regions, the US, Europe, and also 2 representatives of Russia. And we'll be talking today about financial resources and also some non-financial resources and the recent changes in the landscape given new models and frameworks that we have seen for startups in different stages of development. So without further ado, I would love to start with some intros, very brief intros of up to 3 minutes where each one of us will introduce ourselves and talk a little bit about what we do. So let me start with a brief intro about myself. My name is Rebeca Hwang, and until last year, I was a founder and entrepreneur, but recently I have co-founded a venture firm called Rivet Ventures that focuses on startups that back the female demographic, so markets that are predominantly female. We're agnostic about the female gender in terms of the entrepreneur or founder, and we are looking into taking advantage of the really interesting market opportunities given by consumers and users that are usually, in many of these startups, the predominant user base or consumer base for startups. So if maybe I'll go right and we can continue with introductions.
Hello, everyone. My name is Aidar Kaliev. I'm a global head of venture capital at VTB Capital. Many of you know that VTB is the second largest Russian banking group and #1 Russian investment bank. Our business was founded 7 years ago, almost. We have $350 million under management, and we're pretty classical venture capital fund investing in early stage companies, mostly in Russia, though we have US portfolio, where our portfolio companies have some Russian edge, Russian origin, Russian engineers, and value add from Russia. We invest in IT, but in IT and hard technologies, and I think it's pretty unique now that we have pretty broad portfolio of really high-tech investments in the sphere of nanotech, microelectronics, and new materials. That's almost it.
Thank you. Shahab?
Good morning. My name is Shahab Kaviani. I'm the co-founder of CoFoundersLab, and I'm from Washington, D.C. About 4 years ago, I started to notice a lot of the resources going into starting startups, whether it's accelerators and early stage funding, and realized that we were putting all this energy into a broken system with 90% of these companies failing, which led me to research why are these companies failing, and it turns out the biggest culprit are founder-related issues. So I went on to study that and create a algorithm to match up various skills and personalities, and that's resulted in the largest community of founders online now. We have about 25,000 members worldwide, and they're out there to match co-founders and find advisors as well. I'm proud to say that we've launched well over 300 companies around the world. In addition to the online platform, we host events in about 40 cities, including Russia, at Digital October quarterly, and where we're introducing founders. Notable to this topic, we were the first company in the US to do Title II crowdfunding, public solicitation for fundraising, and actually it led to an investor from Russia, which would have never otherwise have learned about it, the opportunity, had we not had that privilege to do crowdfunding. And to finish where we're going with CoFoundersLab is we're now introducing our cohorts, our graduates, our members to investors as well. So we focus on assessing the investment primarily around the team. As you know, the earlier you invest, the more it's important to, or it's more critical based on the team dynamics. So we're developing a team score if they're fundable, and then introducing them to various investment, whether it's a crowdfunding platform or early stage VCs. Thank you very much for having me today.
Thank you, Shahab. And Kirill?
I'm sorry. Hello, everyone. My name is Kirill Tikhonov. I am head of business department, SME business department in Promsvyazbank. And today I represent Promsvyazbank, of course. And I would say that Promsvyazbank is one of the leader maker and has very strong position in the SME market. We have our outstanding portfolio more than 100 billion rubles. And of course, we provide as classical lending, but not only. We also provide our entrepreneur non-credit products like current account, commission products, and our new. I would like to present our new project. Last year, we create special fund for young entrepreneur. In order to help them to start their business, it's sort of help for startup business. And I think that today I will have opportunity to say words about this project.
Thank you, Kirill. And Esther?
My name is Esther Dyson, and I do a lot of things. I'm both an angel investor and a board member. I have my own startup. So before I describe myself, I'm just curious, who is here? Who is from Russia? Raise your hand. Okay. Who is an investor? Who is an entrepreneur looking for money? Okay. And who is from the government trying to make this process work better? Okay. So a nice and diverse group. That suits me. I'm a diverse person. I have investments in Russia. I'm on the boards of Yandex and Luxoft, which is an IT outsourcing company. And I have a lot of investments in the US, mostly in IT, but also in space, like Cosmos and health.
Thank you.
Good morning, Francesca, Natali, and I represent ZernikeMeta Venture, which is a European management company managing 8 early-stage funds all around Europe. We are based in Italy, but we have a number of early-stage funds, partially public funded in Italy, but also in Slovenia and in Poland. We mainly invest together with business angels, and our investment target is early-stage companies. We have under our management around 100 million euros, and we have invested so far in around 40 companies.
Thank you. And last but not least, Oliver.
Hello, thank you very much. My name is Oliver Gajda. I'm currently the chairman of the European Crowdfunding Network. I started out as a journalist. I covered the alternative financial industry in London for several years. I moved to Brussels, became a lobbyist for the European Venture Capital Association. I worked with venture capital quite a bit since 2000 roughly. I moved into microfinance into Washington, D.C. and worked there for some World Bank finance projects and some large networks on microfinance. And I did a management buyout in a company that was dealing with tech entrepreneurs and venture capital, matchmaking them. And I also run a social entrepreneurship foundation in the Netherlands that we grew into 82 countries. And right now I do this European Crowdfunding Network as a pleasure because I believe that we have to dramatically change the way we allocate funds to startups. And if we don't start a political discourse, then we will never be able to actually create adequate rules. And our work will be paid off today with an announcement of the European Commission about their processes on crowdfunding and legislation across Europe. So that's quite positive. Thank you.
Thank you. How exciting. We have a really diverse group today. So we'll be covering topics around what is new in a financial landscape available for startups. Some of those topics include crowdfunding, as well as the role of corporations and corporate venture that has increased over the recent years, as well as a number of government programs like Startup Chile that are providing grants to startups that are willing to relocate or work with governments in creating their startups. But before we get into some of the specifics, I would actually like to start with Esther in terms of what are some of the trade-offs or pros and cons in terms of actually accepting funding from institutions and formal investors for the entrepreneur.
So the thing to understand, the moment an entrepreneur takes an equity investor, is that the company now belongs partly to the investor. And so if you have a mission, if you have a particular way you want to run the company, either your investors need to be in agreement with you or you're going to face challenges. So it's really important to understand what your investors want. If they want only profits, that's fine, but you may end up not being the means to profits and they may replace you. So it's no longer your company. On the other hand, I see many entrepreneurs who keep control and destroy the company. So the question is who's actually right, and the entrepreneur needs the wisdom to know whether the investors are right or he or she is right. If you want to keep control, crowdfunding, customer funding, if you can get it, loans are much better mechanisms for raising money because you don't give up ownership. And it's a question of what you want. I had a business for 25 years with no investors. It wasn't a very good business, but it was a wonderful life. I ran a conference, had a newsletter, learned everything, but my mission was not to make profit. And because I had no investors, it worked.
And it seems like it's about fit between what the entrepreneurs want as an ideal scenario and the investors want. And I was curious to hear more about your team score and how you, as investors and potentially program organizers, you also evaluate the fit of that team for your program. Could you talk to us more about how you think about the match between those founders with each other and the team with you guys?
Yeah, so first we want to measure for just entrepreneurial competence. So there are some emerging science around entrepreneurship competence. Founder Institute does some screening when they accept students, and they're starting to create questionnaires around that. We're working with Berkeley and MIT to better, profile for entrepreneurial competence. So first, we have to know if just they're individually a good entrepreneur, and then we can get to how are they, well complemented. And some of it is pretty basic stuff, geography, industries in common. We often think of the skill sets being complementary. That's sort of the obvious places to start. The more inexact areas is what we're really interested in, which is the values and goals being in line with one another. For example, we want to know if they're both going for the same size of the play, whether they're doing more of a lifestyle business that's not, have ambitions to have 200-300 employees and, create lots of jobs and do an IPO, where you might have a lifestyle, business where you just, it's never going to get much bigger than just yourself. So making sure those things are in line. We do a personality assessment also where we leverage some thinking that came from a group in Chicago called BOSSY, which stands for Builder, Opportunist, Specialist, Innovator. And so those are 4 what we call archetypes. And I can explain the definitions of those if we have time. But those are some of the dimensions that we're looking at. And if they have a high team score, and they are a good team, and they are fundable, then we may advance them to the investment matching services that we haven't announced yet, but I guess I am announcing it now that we've been in our research with this new offering. And if they're fundable and they have a good team score, then we hope that the investor would concur with our assessment.
Yeah, no, that's great. Yeah, sure.
I'm just curious, you mentioned 90% of startups fail. Do you have numbers for people you've worked with? Do you actually have results or impact?
Yeah, so we're a little too young right now because our cohorts are just forming. So we formally only started doing this 2 years ago. So we have some companies that are now graduating, and unfortunately we kind of have to just rely on their funding progress, which isn't a very telling indicator. But some of them have gone on to raise $3, $4, $5 million or so. But we're betting, the big bet that we're making is that our teams will outperform the general public. We have found that our teams are about 10 times more likely to be able to successfully raise funding. But we're still too young to know that they are actually going to be outperforming the market.
And I would love to hear the European perspective, but I just wanted to do a check. Do you guys hear in the back, or do we need to speak up? Okay. Can everybody, can you hear? Yes? Okay, excellent. So from the European perspective, what is the situation? I'm from Latin America, and in South America, the issue of control is a big topic for entrepreneurs. There is resistance to give up equity and control on the company to investors, because traditionally that's perceived as a negative thing. And we have a traditional VC affiliated with EFJ. We have a bank that is more on the loans and credit services for entrepreneurs. And of course, we also have another professional investor and an expert in crowdfunding. So I would love to hear your perspectives on what are some of the local tensions between entrepreneurs and investors who are talking about some of these trade-offs.
If you like, I will go first. I mean, as I said, we are investing, we are a public-private partnership, and we are founded by European Commission through structural fund. And according to the guidelines we are obliged to attend, we are always a minority shareholder. It means that founders still control the companies, and they have the full commitment in running the venture. And the point is also that we have a sort of alignment of interest. It means that the investors and the founders are working after the investment for reaching the same goal, which it is to create value into the company in order to reach a successful exit. So, I mean, the point is to work for reaching some type of alignment. And being, let's say, a minority shareholder give you, I mean, the right position to control the company and to leave to the founders the right motivation to push up the company in order to reach the success.
And what about the local scene in Russia?
Now I don't see that there is a problem of taking majority or minority here, and it was very great evolution through last 5 years, where we see the entrepreneurs who understand the rules of the game, that they have not necessarily have the majority. And our clients, our entrepreneurs, in most of the cases, they're pretty flexible to have either majority or minority. But the most important thing is the alignment of interest between the investor and the entrepreneur, and the alignment of goals. So whether you want to make a lifestyle business, in these cases we just statistically see that in this case entrepreneurs wants to have majority, and this is an indication that if he insists on majority, it means that he has a bit different agenda that we have, because at the first meeting we clearly indicate that we want to earn money on this investment. Would it be in 3, 5, 7 or 10 years, but the goal is to earn money together with you. Therefore, we don't see a problem here. But the institutional environment in Russia still, to our mind, needs us to have at least significant minority to somehow influence on major decisions. And one of our key value add here in Russia is to institutionalize the business, to make corporate governments working on the best standards, to make the transparent company. Therefore, in most cases, we want significant minority that is more than 15 or 20% in the company. But in our US investments, it's not the case at all. We have, in some companies, we have 3, 5, less than 10. It's not a problem for us, because the culture and the institutionality of the environment is a bit different and much more advanced.
Mm-hmm. And in the case of loans in the US, oftentimes for early stage entrepreneurs, credit and debt are last resorts for funding. How is the scenario here in Russia? What is your experience having worked with founders in Russia in terms of providing credit and financial resources for them?
if we speak about our experience, I could say that, of course, we provide standard lending products for our businessmen. And despite the fact that in Russia there are a lot of banks who provide different services for SME business, there is one problem in Russia. That's if you have a good business, you can attract money from banks without any problems. And now we have very good market from bank's point of view. And if you have a startup project, your chance like zero, because banks can't estimate in a proper way technology and your business model, and to write maybe I would say to make right decision. So we decided to solve our problem, this problem by creating special funds settled before, and for us it's sort of chance to provide money young people and very small businesses who have a lot of problem with attracting money. And our experience shows that it's right decision. Now we have only maybe 10 entrepreneurs who is our partners now. But of course for us it's first steps only, and I hope that step by step we can obtain a lot of experience in this way. But I would say that for banks it's not classical way, especially for ours bank, because different technology, different approaches we use for this. So,
of course. Apologies for the background music that we have right now, but hopefully it's going to get better. Yes.
May I ask you something? Do you invest public or private money into startups?
Of course, it's money of our shareholders. It's not a lot of money. It's about 300 million rubles, $10 million. Yes, but it's only first step. Because settled before, for Russia it's very unique sort of business startups, lending startups. So we decided to try to do it.
So talking about trials and going back to your point, Esther, about giving up or maintaining the control, sometimes with crowdfunding, I would like to switch over to that topic, and I would like to ask Oliver to give us an overview of crowdfunding in Europe. And I know you have some comments on the US, and I would love to hear the perspectives from the other panelists. But how has crowdfunding changed the landscape in terms of access to financial resources and maybe the situation of control of the company versus not in favor to the founders?
Yeah. So crowdfunding is still emerging. It's still finding its own way. So it's very difficult to really give a clear overview. We have an estimate of about 300 to 400 platforms in Europe that do different types of business models. That is donation, reward-based or beneficial, rewards. Say, materialistic things, pre-sales, you can adjust to that as well. Then we have lending, and we have also that's debt, and we have equity funding. The regulation in each country is different, and the banking sector in each country in Europe is different, and the venture capital industry in every country is different, and the business angel industry is different. So according to the development in specific countries, you have more vibrant markets or less vibrant markets in some forms of crowdfunding. In the UK, which is a country that is focused on financial services and that had a big banking crisis, the lending model is really, really going well. So we lend about £1 billion, just a bit less than that, over the last few years through crowdfunding. So that is you to me, we to each other. That is already quite significant. If you look at the size of the equity crowdfunding market in Italy, which has been regulated, and we have Italians here, then that is still very immature. We have the first transactions coming up. In Germany, you have equity crowdfunding, which is quite significant already. We talk about the sizes of small venture capital funds. Now, when we talk about equity crowdfunding and the issues about giving up ownership, it doesn't really change that much. You still give up ownership if you have a pure equity transaction, though sometimes it is structured as a subordinated debt with equity kicker, and then you have a little bit more control as an entrepreneur over your thing. I think the main point is here that when we think about investing, we have to change our ways of how we approach investing. And the alignment of interest is very important. And crowdfunding is potentially able to open a few new doors, yeah? to look at more social engagement or other reasons to invest than pure financial return. But overall, I don't see yet that we have better return rates in crowdfunding. This still has to be proven. We don't know that. We know that the European venture capital industry is the laughingstock. It is to a large degree subsidized by the European Commission. 30% of all VC money in Europe is European money, so my money, my tax money. And we know that the European venture capital industry invests in about 3,000 companies a year out of 20 million. So it's not the solution how we can drive entrepreneurship. Yeah. And this is why I think that crowdfunding can open up the way we think about this. And it has done already quite extensively in areas that no venture capitalist would ever have touched.
So a few weeks ago, I was actually at the Mobile Congress in Barcelona, and out of 490 projects, 10 finalists came together in Barcelona to compete for the winning position. And out of 10, there were 6 companies that had already run campaigns on Indiegogo and had some level of success. So that made me wonder if now having a fairly successful crowdfunding campaign is a prerequisite sometimes to raising more funding from traditional investors. And I know Esther has some thoughts on some of the potentially negative aspects of crowdfunding in the ecosystem.
So in theory, I love crowdfunding. It's brilliant. It enables somebody with an interesting idea to go directly to the customers and say, do you want this product I'm describing? Do you believe in this kind of business? And so at maybe that top 10% of companies that's successful, it's a great way to get to that success. There are 2 problems. Most of the people investing in crowdfunding companies do not understand that 90% number. So they're basically being encouraged to gamble without understanding the odds, number one. Companies that raise crowdfunding often don't have good management. There's no guarantee they can deliver what they've described. The due diligence is limited, to be polite. And so I think you're going to probably have an even higher rate of failure, which is not terrible. You're also going to have, in addition to uninformed investors, you may very well have either uninformed, incompetent, or even fraudulent entrepreneurs. That's okay too. It's a free market. But I think people don't understand the statistics. Once they do, I think the mechanism inherently makes sense. I was interested to hear yesterday at a different event from this, crowdfunding has not been very successful in Russia. It's not a country of high trust. To the extent that it is successful in Russia, because it's limited, it may help make the country more trusting. In the United States, it may help make the market less trusting. Things like Airbnb, eBay, all of them are building now, if you like, regulatory trust systems because they need them. Unfortunately, anytime you create a free and open market, you're going to have bad players come in. As long as you understand that and you deal with them, it's okay. But you need to put that protection in first, and I'm not sure that we have.
So, yes, sure, Francesca.
Yeah. I agree with Esther. I believe that when you are investing in 2 startups, money is not enough. So you must support the company, especially at the very beginning, not only with money. So I prefer to use a different type of co-investment tool rather than crowdfunding. It's much better to invest together, maybe with business angels, and so you may use also a small ticket coming from from private investors in order to financially support the company, in order to find the right type of knowledge, skills, and competencies that you may use to support the companies from a managerial point of view. And with specific reference to crowdfunding, I have an experience in investing together with a crowdfunding platform in Italy. It is something that is hard to do because you don't know your private investor coming from the crowdfunding platform, and they do not have a certain label that ensure you are investing with the right person, with the right profile, and so you may be in trouble as a formal investor. So I like crowdfunding, but in a more, let's say, regulated way.
And would you like to respond to Oliver's point regarding crowdfunding as a means to compensate for the lack of professional VCs in Europe, potentially because of the subsidies that the VC industry receives here?
Yes, you are right, but I think there could be different tool in order to attract private money into the early stage market. According to my experience in investing in 2 startups, co-investment fund with business angels are the right way to support such type of investment among private investors. I think that the European Commission so far is taking the right direction in order to support co-investment funds with business angels, also at the European level, also in order to create a European market for our national startup.
And you had a comment?
Just the crowdfunding compensates for the lack of money, but it doesn't compensate for the lack of wisdom, assuming that the angels or the VCs can bring that. And that's really what you want as a startup. You want people with advice, with contacts, with experience, who can give you what you may lack. And that's why, especially in Europe, I would always go for more experienced entrepreneurs rather than the 20-year-old who dropped out of college, who doesn't know anybody and doesn't know the market they want to disrupt.
I don't think crowdfunding tries to challenge the business model of the smart money that venture capital business angels bring, even though it can do that in cases. Since crowdfunding hasn't yet formalized, we don't have best practices, we can do whatever we want, yeah? We can be really innovative. There are very great platforms where you have better investors investing through crowdfunding platforms than you would ever get if you go to VC, because they are sophisticated angel investors who've done that since 20 years and that use crowdfunding to identify new trends, new teams, and work with them early on so that they can later invest in them. And we've seen successful exits from crowdfunding platforms to venture capital funds and to business angels. So I think there's a lot of lessons to be learned also for the venture capital industry and the business angels. And if crowdfunding is not being, cut down by legislation, I would argue that in 10 years no VC exists that hasn't used crowdfunding to pre-validate demand, interest in the market, and even some first revenue and investment. And this is, I think, where we have to work towards to, and there will be some kind of collaborations. We see that already with AngelList, which is basically a crowdfunding platform for business angels, and we see the same thing for venture capital firms, yeah? Because their deal flow management also has to go with the times, and this is what we see when we digitize information, which crowdfunding is due, and in this case also allocation of funds. There will be big changes to come, and I think crowdfunding will fundamentally influence that.
So I get emails all the time from AngelList. Here's a company, Jason Calacanis, John Battelle, take 6 hot names, have all invested in this thing. Won't you invest in it too? And it reminds me of a saying from Ben Graham: in the short run, the market is a voting machine. In the long run, it's a weighing machine. And I'm concerned there's too much popularity. These VCs are not all brilliant. They're just fashionable.
And now I would like to actually hear a little bit more on this side of the panel, both in terms of, you have been in the incipient movement of crowdfunding in the US, where we still have a lot of institutional challenges for equity crowdfunding. And then after your comments, I would like to hear your response to Esther's comment about the lack of trust in Russia that potentially could create problems for crowdfunding, and in reverse, crowdfunding could be an instrument used to increase trust from the crowds to this type of projects. So let's start with you, Shahab.
Sure. So first, let me just explain the circumstances of our fundraising efforts. So we had already raised well over $600,000 US before we went into crowdfunding. So we didn't really go into it as a necessity. It was, I did it because I wanted to try it in order to pass that experience on to my members. So if we're going to recommend crowdfunding, we wanted to try it firsthand. And if you're interested, I've published a report on our full experience about that. One of the things that I learned by going through that process, and I would echo Oliver's point, is that we actually did get some very smart investors out of it. And so when you have lots of investors, you can bring a diverse group. And by diverse, I mean, one, they're representing our interests in geographies that I would have never had access to. So in Russia, in Boston, in California. So they are, pushing the CoFoundersLab agenda because they're investors. The other thing I mean about diversity is that they have access to networks and customers and partners, and if you're resourceful and you can stay on top of them, you can really unlock that, and it's really been tremendous for us. I think just the doors that have been opened in Russia for us because we have a Russian investor, thanks to crowdfunding, is a benefit. So the networks is important, and the other, and I also want to just clarify that we only are accessing accredited investors in the United States. It hasn't been opened up to non-accredited investors. And maybe we need to define that for the audience. And I also would agree with Esther that there's a lot of education that needs to happen. So some of them are first-time investors, and sometimes that sales cycle for me was too much, and I just bailed. But one of the things that I think in the regulation it will require some sort of waiver, before you ride a roller coaster, saying that you may fall off this thing, it's not our fault, and you might lose all your money. And so in fact, I walked away from one investor who I thought was being a little too naive, and I just felt ethically it was the right thing to do. He had just come into some money through an inheritance, and I think was being a little irresponsible with it. I mean, it was too much of his net worth, I thought, to be throwing around. On the negative side, you can also get a pretty messy cap table, but there are solutions to that. You can create SPVs to roll them up into a single nomination, and I think those products and services will be streamlined as it becomes more popular.
Thank you. And so Aidar or Kirill, would you like to comment on the potential of crowdfunding for the Russian ecosystem?
Okay, you can say that for Russia, especially for our bank, it's a very unusual topic because now we use only our capital of our shareholders, and of course it's a big problem to attract money for invest for such project. Because first of all we run risks, and it's our risk, and our clients of course very worried about their money, and sometimes it's next to impossible to persuade them to invest money in project with high risk. And in that case, of course, we run risk. It's our risk, and we guarantee for our clients that everything will be okay. I think that on the other hand, we have a very good expertise, and maybe it's maybe it will be a good practice to attract money using our name now, name of our banks, of our credit organization, because crowdfunding it's a bit unusual right now for us. I know.
Would you like to add to that, Aidar?
Yeah, sure. There are two main obstacles for crowdfunding in Russia. First, I think we still lack the diversified investor base. So there are not a lot of angels or wealthy individuals who are ready to put money in sophisticated companies and technologies. And the second is the problem of trust. And there are two problems that should be somehow resolved to make it happen in Russia. First, from the perspective of investors, I think the main thing that we need all do to make it happen is to educate investors, because there are very few VCs and early stage investors and wealthy individuals who understands the rules of the game. Everyone thinks, oh, we see Alisher Usmanov invested $600 million in Facebook and got 5 billion. Wow, we all want to make the same. But to make it, you need to really feel the spirit and the rules, how it could happen. There are a lot of, to my mind, illusions of how to get money on technology business. And the second thing, the whole ecosystem lacks exits. We have only a few of them, which is really great. So we had Yandex, and Esther will tell how many people got at least 1 million out of this IPO. I think like more than 100, yes?
I can't count that high in Russian.
Okay. We had a number of technology IPOs for the last 3 years: Yandex, Mail.ru, Luxoft, Kiwi, etc., etc. And there are a number of people who earn some significant money to try investment in different stuff. But still, there are not a lot of them. And of course, we need to educate even them how it can work, because if you don't understand the rules of the game, it's better not to play this game. From the entrepreneurial view as well as investors' view, because if the entrepreneur gets the non-sophisticated investors from the very beginning, it could really hurt its business. And the second thing is trust. I think Esther mentioned that we have lack of trust in Russia of giving money to someone, especially in equity, and wait for I don't know how many years that someone will get your money back. It's a more cultural problem. Therefore, Airbnb is not really successful here. Therefore, it's more educational and work to be done to make it happen.
Yes, any concluding remarks on the crowdfunding, and we'll shift gears to corporate venture.
I can't speak about the Russian market, of course. Yeah, and I know that in many other European countries, crowdfunding doesn't really kick off either because of similar cultural issues, or because the banks in Austria provide really cheap loans to small businesses. But the aspect of the sophisticated investors and this knowledge that investors have, and then the professional investors like you draw from the claim that you have the experience, that you've done it, I think we can discount that to a certain degree. I think it is very true for very specific technology-focused, high-growth companies. It doesn't count true for normal business. And this is where crowdfunding can actually get a lot of good knowledge from the broad masses. And maybe another point, when you see a business, as a venture capitalist, this business is already in the market for maybe 3 years, maybe makes revenues, that I would argue this company has already seen 100 non-sophisticated investors that have gone through the investment process and know about the risks. And if I calculate that up with all the startups we have in Europe, or all the SMEs we have, that all have started with an equity investment, there must be millions of non-sophisticated investors that have probably quite a good understanding of the risk, but they're willing to take it. And this is what we have to identify. And then you're right, it's a lot about education.
Well, now let's shift gears from the crowds to corporates. And in recent years, especially in the last couple of years, we have seen a significant increase of involvement of corporations in both funding and also supporting entrepreneurs through accelerators, having programs like hackathons and events. So I was wondering, and I know both Esther and Shahab said you had pretty interesting opinions on corporate venture and the role of corporations in providing both financial and non-financial tools for entrepreneurs. It used to be that startups were in conflict often with corporations because they had competing products or they had innovation that was competing with the internal innovation of the companies. But it seems like the trend is changing into more collaborative, cooperative models and frameworks. So who would like to start, Esther or Shahab, in terms of the role of corporations?
Okay, so first of all, in some sense, this isn't new. Perhaps the most important creator with both money and smart resources of startups in Russia was, in fact, the group of IT companies that came here in the 90s, Oracle, Hewlett-Packard, Microsoft, IBM. They all funded and invested in dealers and resellers and software houses. They did not only give them commissions for selling products, but they trained them. They gave them training in programming, but also training in business and sales management. They brought them to sales conferences in Europe and the US. And many people who are now programmers and entrepreneurs and their parents owe that to what these corporations did, not because they were trying to be nice or do innovation or any of that stuff, but because they were trying to make money and they saw the talent here in Russia and invested in it. So what I see happening now is something similar also in the West. These large companies are saying we can't compete with Google or Facebook, so let's see if we can somehow share our resources with these people, whether it's sales channels or interesting problems. I'm a pharmaceutical company. I need somebody to develop a scientific solution. I'll hold a hackathon. And you see this happening again and again. I was former chairman. I'm now on the Global Agenda Council of the World Economic Forum, which sponsored the Global Library. I need to put in that commercial pitch for them. Our mission is fostering entrepreneurship, and we're trying to persuade corporations how much opportunity there is in working with these entrepreneurs who do not want to work for them. They don't want to follow the IBM dress code or deal with all the bureaucracy, but they do want the access to customers, and they want the access to understanding customer problems that these large corporates have. It's a very productive marriage for both sides. It's not one side it's both sides taking advantage of the other successfully.
And I have also noticed that trend where there is more willingness to look at the complementary resources that both parties can offer. What happens sometimes is that the leadership of the corporations is on the same page, but then the workers, the people on the ground, may not like the fact that they have startups changing the way things are done.
They see it as competition, or I know one large company that is involved with an incubator, and some of the incubatees, the little companies, are extremely distressed. They still don't have access to this large company because, yes, the CEO thinks innovation is great, but then their middle manager wants their quarterly results, and he doesn't care about this innovation stuff. So you need to have it go through the organization, or it won't be successful.
And so how can that be changed or improved so that the collaboration is actually more impactful and meaningful?
If I may, I just want to explain sort of the observations, because I don't know if the audience, how prevalent it is in their home countries. But in the United States, what we're seeing is large corporation, I mean, like Esther said, it's not necessarily new, but the way it's being done is new in that they are investing in earlier stage companies, right? So, for example, Telefonica started an accelerator group called Gajda. They have locations in 12 cities throughout Europe and Latin America, and they're trying to produce technology that they can either commercialize, take to market, potentially acquire, and that serves their interests. I think it's a very smart way to do that. I mean, imagine if Google had incubated WhatsApp, and instead of paying however many 13 billion or whatever it was, they could have made a $50, $100, $200,000 investment. And so what are we? So beyond what we're seeing, let's ask the question: why is this working? And I think the reason that this is going into motion is for the corporate side. For example, we talk with American Express. They have an incubator program. They make early stage investments, and you could argue that they sort of fell asleep at the wheel when Square came out. I mean, why wasn't Square an American Express product, right? So they want to make sure that doesn't happen again. And I think that the large companies want to bring that more organically, and the corporations aren't very the bigger they are, the harder it is for them to innovate. The ones who do it really well, say like an Intel, they're really focused on it, but typically these larger companies can't innovate real well, so it's nice to essentially outsource that. And then on the other side, on the entrepreneur side, the reason I think why it's being fueled is the entrepreneur can now go and solve a problem, let's call it funded innovation, where they know that they're solving a problem, that there is a customer on the other side, potential acquisition, instead of working on the next stupid iPhone app, right? Because it's interesting, or they know how to build it, or it's cheap to get into the market. So I think those are the two things that are happening. And in addition to the Telefonica example, which is fairly broad around telecom, we're also seeing accelerators like Nike's accelerator, like Sprint's accelerator, like Kaplan in the ed tech industry. Those are being assembled by Techstars, which is maybe one of the most mature end customer of ours accelerator that's out there. So I hope that's helpful.
Yeah, and on top of the tech companies that are the usual suspects, the Intels, the Microsofts, and the Amazons who have programs, I have actually noticed that in Europe, let's wait until the clapping is over. There are also companies that are from more non-traditional tech industries, for example, LVMH, fashion, carrying. They're also starting to look at tech companies and how commerce, for example, e-commerce could change the way business is done for them. Do you notice in Europe companies that are not from the typical tech industries that are also getting involved with startups to work together with them in finding new payment systems, new commerce sites, etc.?
So right now it doesn't spring to mind. I know that we have corporate venturing since a long time, especially it works, of course, on the IT side, on the pharmaceutical side as well. Maybe the one point I would make to that is that as the entrepreneur, you lose out because you're not able to sell your business to anyone else but Microsoft or Apple or Google, unless they have a chain and they have a partner that buys your business. So you're really linked into the ecosystem, and as an entrepreneur, you're less free to operate. And if the big company doesn't like what you do anymore, you're dead. They let you dry out. You don't get funding and you're out. So there's a big risk attached to that. For the corporation, this is, I would argue, their approach to open innovation. Let's do other people think of good ideas and we can take them in if they're good. Acceleration and incubation is happening in Europe everywhere. And we have US programs that come over like Techstars or Founder Club. And we also have small incubation centers that are funded by large corporations like SAP that don't necessarily focus on their own technology there. So we have these types of things that happen, but it's to be taken with a little bit of concern as well as an entrepreneur.
And
yes, go ahead.
Barclays would be a good example. I don't know if you can share what they're doing. Barclays Bank with their accelerator. Are you not from? Okay, sorry.
So, similar question to you guys. Esther mentioned some of the American companies that are in Russia and helping create a bit of the ecosystem. But do you see more of the other traditional corporations being more open to working with startups?
I would start for the first statement that from our experience, especially in industrial technologies, it's very important and very good to have a strategic partner as early as possible. We are investors in 2 companies, both in US, one in the glass industry, one in the microelectronics, and we have strategics from Japan and from United States from the very beginning. And we see how it works, and the progress that companies achieved could it could happen, but in maybe 2 or 3 years more, unless we got the investors at the very early stage. So I recommend to all the entrepreneurs, especially in the industry, industrial technologies, to look at this closely. And I would like to share the experience of VTB, because we started this business as just pure financial business to earn money on. And now I feel myself, even the whole bank is not feeling itself, we are somehow becoming a sort of a corporate venture for the big bank. We are investors in 2 disruptive payment companies in Russia. One is the biggest mobile payment platform, and the second is biggest proximity payment platform using NFC technologies. And it appeared that this company has a great value add to the core business of the whole bank. And only after 5 years, the bank realized itself that suddenly it has the biggest player in the completely new payment market, so electronic and mobile payment, that is #1 in the country. And now it's like something like click in the heads of stakeholders that, wow, venture capital, we started as the financial business, but it really add value to our core business. And of course, we believe that these 2 companies can, get back all the funds that were invested before. Only 2 companies. And in this sense, just I wanted to share this evolution within our organization and the experience of our competitor, Sberbank, who started a new venture fund completely focused on banking and payment technologies, is another proof. But I would like to say a couple of words that corporate venture in Russia just doesn't exist. And it's a shame, because Russia has to develop its technologies and to be in this open innovation, paradigm, and to get the technologies, to grab the other prospective technologies inside the corporations. And we are now negotiating for 2 years with one of the biggest automotive company of Russia, who wants our technology platform to be implemented in this company, and they really want, but they don't know how, and the bureaucracy and the mindset doesn't allow them to move forward. And it's a really the burden of the business that they just don't understand how to make it. They don't understand the rules of the game. They want control from the first moment. And I think if the approach and if the education of our corporate industrial players would be better, it would help the whole ecosystem and the whole startup community.
Very much agreed. Now, the audience over there is making a lot of noise, so I think at this point I would like to invite you guys to also make some noise and ask questions. We have about half an hour to take questions from the audience. If you could be specific on who in the panel you would like to answer your question, that would be great. So let's start over there.
Malikov Tatarstan.
This is a question addressed to everyone. Every year we see the world population growing, and all these people, they want to eat on a daily basis. Why don't we want to invest into agriculture and into the feeding industry?
Population growth and lack of food. Why is that the investment community is not interested in agriculture and feeding industries?
I'll answer in Russian, okay? Ну, во-первых,
Well, first and foremost, investment into agriculture and investment into new products, that's an enormous investment sphere, enormous investment area, which is currently being used by all investors who are based in Silicon Valley, for example. As far as Russia is concerned, we had two cases when we invested into agricultural companies here in Russia, and both these two companies failed and they produced loss, so we had to close them down. Why did this happen? This is because our investment climate is quite difficult for investing into agricultural business, because agricultural business here in Russia is a highly volatile market, and business has got great momentum, and at the moment is not likely to accept the concept of innovation. And there was an excellent technology which could have been extremely productive, but it has never been bought simply because people were very conservative in mentality.
Making big investments in Ukraine, for what it's worth, in land, but also Wimbledon, McDonald's, aren't those guys investing in farmers, or at least supporting the farmers in some way?
I can tell about other companies, but I know about VTB. So we have the private equity group, which can pay bigger checks, and they invested in agri. They invested tens of millions of dollars in farms. It's pretty early to judge is it successful or not, but it happens here. But I spoke about the technology investment in agriculture. It's a different game, and we failed in all our investments here.
Just for this gentleman, there is a lot of investment now in surveying land, drones, lots of data collection around farming and weather and stuff like that.
And there are definitely some new players in the US that are trying to disrupt the way food is consumed from the consumption side of things. Do you have a...
Also, for us, investing into the agricultural sector, it is not, our main investing sector. We mainly prefer to invest to technology applied to the agri-food sector rather than into the biotechnology sector applied to agriculture, but not directly into the farmer sector. Also, because in Italy, for example, lots of public money is going to that sector, and we are not allowed from a certain point of view to invest into that sector.
And Oliver?
Yeah, I think there's a huge amount invested, but here the round table is more about venture capital, and venture capital business model has a very short life cycle. So you want to acquire a company and sell it within 3 to 5 years, maximum 7 ideally. And you might not always be able to do that in agricultural and traditional investments. And of course, technology that we talk about here, we heard it, or the apps, is very low cost. You can start a business today with 20,000 euros. 10 years ago that was very different even in the IT industry. But if you look about traditional industries, the pre-app investment the upfront investment is much higher, and so the way you can switch and make a profit on it as an investor is more difficult. And so the interest is more on those industries where you can make a lot of money with a little bit of work very quickly.
I would like to invite another question. Yes?
Good afternoon. My name is Alexander Saltykov. A lot of financial institutions are currently inviting. Do you hear me? Oh. A lot of financial institutions are currently placing ads on their websites, and they are welcoming startups to come up with their business plans. And we have visited various financial institutions with our business plan, including VTB, but we received no feedback. And I would like to find out what happened to our project. Why do you think it was not? Why didn't you get interested in it? What was wrong with it? Was it something wrong with our team or something else? And it happened every time when we tried to send our business plan. Do all financial institutions work like this, or is it just a Russian feature?
International colleagues to help me. Actually, you as investor is not obliged to answer the letters, and yeah, you're not obliged. And if we see something interesting in the project and we see that we need to talk and to get some feedback, we definitely contact to those who send us the projects. And maybe you guys can take what is the best practices in Europe or United States.
Okay. For example, we always provide a negative feedback. We say, okay, we are not interested in your business opportunity because it doesn't fit with our investment strategy. So this is our standard reply when we do not accept the investment proposal. Sometimes on an informal base, we may provide additional details why the business opportunity is not eligible for us. The reason why we do not enter into a much more detailed, let's say, reply, it is quite easy because it's something very, sometimes something very subjective. So we don't want to enter into, let's say, a negotiation process on why it doesn't fit. So we say no, thanks. Yeah.
If it makes you feel any better, it's certainly the same way in the United States. It's as an entrepreneur, I've found it quite frustrating because it can be one of the best feedback loops to be able to make the adjustments. And the few that have provided feedback, we've actually. For example, we were challenged with, finding more recurring revenue models, and we've made those adjustments because of negative feedback. But I'm hopeful that crowdfunding will level the playing field a little bit because, unfortunately, for the entrepreneur, but fortunate for the VCs, they're in a great position because they got all the deal flow and they don't have, it's sort of an unfair kind of advantage. But I think once the deals start to get spread out more evenly, and the VCs start to compete more against smaller investors, hopefully the feedback will start to flow and assist you.
There was another question over here.
I'd like to respond. This morning I got up at 6 and I got an email from somebody I did not invest in. She was asking me to take a call from some other investor to make the case for her investment. And my first reaction was simply to delete her email because I'm very busy and I have responsibilities to the companies that I do invest in. But for whatever reason, I replied to her email. I said, look, the reason I'm not investing in you is that I think the marketplace you want to be in, your idea is good, but I think there are 20 other companies like this. And I have no idea whether yours is the best or the worst. That is what I would say to this other investor. Do you really want me to say that? And I hope that was helpful to her. At least it gave her an understanding of how I'm thinking. But the message to draw from this is, one, I'm not a philanthropist. I invest in companies. Those are the companies to whom I owe a response. At the same time, I'm a human being. I want to be polite and I want to be helpful. So if I'm in a good mood and I have time, sometimes I will give people a full and candid response. And sometimes, yes, I'll simply say, I'm sorry, I cannot give this idea the attention it deserves, which if you're cynical, you will hear one way, and if you're not, you'll hear another.
And I know entrepreneurs really value the feedback, so that's great. Let's move on to the next question.
It's Nikita. I represent Life Financial Group. Just two short questions, if you don't mind. First question to Oliver. Oliver, do you know anything or are you familiar with Russian crowdfunding platforms? And do you see any barriers to integrate them into European crowdfunding network that you represent here?
Could you actually ask the second question at the same time so that...
Oh, sorry. And the second question is to all of you. Are you... there are another instruments that don't name today around this table is factoring or invoice discounting. Do you see this instrument like a help for small entrepreneurs, small medium entrepreneurs? What is your position on factoring and this market?
Do you want to take the crowdfunding question first?
So the first question is that there are crowdfunding platforms in Russia. I don't think they engage in equity or credit, but on the donation and reward-based side, you have them. We are more, of course, welcome to everyone. But the question is, what can we do in Russia? I mean, it's difficult enough to deal with 29 or 28 legislations in Europe, and even that you can't do. And yeah, I mean, I can't say much to factoring. It is, of course, interesting for people that already have revenues and that work. And so I think a company in a portfolio of a VC would probably make use of that when they have the revenues to sustain that. But when we talk about startups, that's often not an option, of course. Yeah. But there's other issues. We didn't talk about bootlegging, yeah, and where crowdfunding can help with pre-sales. Why do you want an external investor on board if you can generate revenue and create enough money to reinvest that in your own business and maybe grow a bit slower because you know that you won't be Google in 5 years, but that you have a nice business that has a valuation of 5 million euros in 5 years. That's fine as well, maybe. Yeah. So there's different ways of funding your business. That depends on who you are and when you are. And just I wanted to make a question to the person before. You just had a business idea here. Venture capitalists come from the old world. They operate with business practices that are out of date. No normal person does this anymore. Of course, we all do, yeah? But they receive about 500 business plans a year, and they attempt to read through them and then on their desk, and then make a judgment, is that good or not? We are in a digitized economy, yeah? These things should be on a press of a button, yeah? So if you have a business idea, how you can make their lives easier to analyze business proposals, not in, 5 hours reading and discussing on the table with their partners, but electronically. And then you have the additional discussions. You can sell that to them and you will be a rich man and they will invest in you.
Anybody else at the panel want to comment on factoring or invoicing, invoice discounts as financial instruments? No? Yes, next question.
I can give small comments.
Yes, please.
Yes. Yes, if we speak about small business, of course, you can send application form in our venture funds. But of course, average sum of our investment is only 5 million rubles. But it's quite possible to attract investment from our fund if you're really small business. If we speak about medium or maybe large medium corporation, I think it's a real problem. Yes, now.
So go ahead.
My name is Emil. I'm here representing myself. I don't have a question. I just have a comment for Esther. She decided to reply. Esther decided to reply on an email that she felt it's not really, she didn't want to entertain the idea a lot, or maybe the idea was not so much worth the time. I would like to affirm to you that it is always amazing and it's always wonderful that you respond to the emails, even those who you might think they are, you don't want to entertain, because if we are really genuine about helping each other and lifting up the community and assisting the entrepreneurs, the answer that you might consider not so important or very, very clear might be very, very important to a talent or a new entrepreneur who is just discovering the world of entrepreneurship. So on behalf of the sender, I'd like to thank you for your response and to just tell you that that was such an amazing thing. Thank you, Esther.
So the gentleman in the back, in the suit.
Hi, my name is Ignacio Garcia, and I really believe that crowdfunding is a tsunami that is coming, and the entrepreneur just needs to take the wave. So my question is for Oliver or for the table in general is, I'm interested in particular in two business models, in lending and equity. My question is, which one should be more successful or will be more successful in Europe? And the second question is, with regards to the regulations in Europe, what are the major challenges to overcome right now in Europe? Thank you.
We can guess about which is more successful. I think it will be lending, just because we all are used to have a bank account and then to get interest paid for money that we deposit there. So the process is very much in line what we do, and we've seen the few platforms that are out there in Germany and in England, a few in France, they actually do quite well. They do quite well. Equity investment is much more complex. It's still far too much based on the existing venture capital model, so very inefficient, very long, life cycles before they actually put a project onto the platform, and the risks are not easy understood. But I think there will be changes in how that is administered as well. From the regulatory point of view, it's an absolute mess. Yeah, we have discounting Turkey and Russia and so on. In the EU, we have 28 legislations. All the legislators try to ensure that they do something different than the neighbor. Yeah, they certainly don't talk with each other. That is kind of forbidden. And the European Commission has not the power to harmonize this market. It's unimportant. It's too small yet. Yeah? So the Commission will announce today that they will spend significant time of making these regulators work with each other and talk with each other, and significant time in analyzing the legislative framework. So we published a book on 29 legislations, and if you go through that, they're all different. And the Commission will probably in the next 2 or 3 years decide if they can actually harmonize this industry. I believe it's a must. If it's not happening, then it will be dying. Equity, at least, crowdfunding, just like venture capital is today nothing compared to what it was 8 years ago. And there it was already nothing compared to what it was 12 years ago. So we have to see, in many countries, lending is prohibited under banking law, and equity is prohibited under capital markets law. So we have to adjust this. There are, though, and we are entrepreneurs as well, crowdfunding, these people are entrepreneurs, there are always gray areas and then kind of slightly illegal loopholes that are exploited, and that will potentially open the way for changes in the law and for adjustments that will create new ways of allocating funding. So I'm very positive there.
Would you like to add to that, Shahab?
Well, as far as the specific players, I think Seedrs is one to take a look at, seedrs.com. They seem to have gotten into maybe close to 50 markets that they're now approved to do the crowdfunding, and so that might be one to take a look at.
I'd like to go back.
Just one quick. Seedrs is no platform operates on a pan-European basis. It's illegal to do. There are certain loopholes under harmonized EU regulation where you can allow people to invest on your platform if they're not from your country, but there's difficulties with listing a project from a different country and then having them invest from other countries. So right now we have Seedrs, we have Crowdcube, we have Funded by Me that operates in 8 countries, but cross-border investment is highly complex, as it is also in the venture capital industry. So we really have to see. We hope that this will still change, but there's a lot of good marketeers out there, like Jeff Lynne is a very good marketeer. Yeah.
There is a new measure coming from the European Commission in order to support the creation of a pan-European market for early-stage investing, and the Commission is thinking to set up a co-investment fund operating in all the different national countries in order to support cross-border investment together with business angels. I agree. I believe that the most important challenging in terms of financing startups for the European Commission is to create a truly effective market for startups.
Let's take one more question, and then I would like to ask the panelists to offer some advice as concluding remarks to any founders who are evaluating different financial options and how to think about the different opportunities. Yes.
Thank you. My name is Joseph. So I have a question. Many times, or quite often, I hear that VCs and investors are guiding startups towards exit. shouldn't the motivation be building something which creates value for customers and then which in turn would create value to stakeholders rather than focusing on fastest and largest exit?
The question is addressed to whom?
Anyone but maybe investors?
Go ahead.
I think it should go together. Otherwise, you can get a great IPO or a great trade sale if you are not taking care of your customers and not taking care of your employees. So to my mind, it should be total alignment of interest, financial, environmental, would say so, and consumer interest.
And if the alignment is there and there's a long horizon, a great story I think is Esther's company that she's on the board of Meetup, and I don't know how they managed to convince so many bright investors to wait 5, 6, 7 years before they had to make a lot of money. But look at the impact that it's made at the social level. It's incredible. But I guess they found the alignment and they managed to do that. I don't know if you want to comment on.
Yeah, I mean, just for what it's worth, Meetup is a perfect example of a company that is not focused on a quick IPO. And there are a lot of investors we don't want. We're very careful with whom we bring in as investors because we do not necessarily want to go public. It's a profitable company, but it's not Twitter, it's not, and it's creating huge value, but probably more for the customers than for the investors, and that's okay. But if we had investors who didn't like that, we would have very tense board meetings. In fact, we don't.
And you had the foresight to wait 5, 7 years to get to this
Well, we had the foresight to pick good investors, like Omidyar and Tony Shea from Zappos, and me personally.
Anybody would like to answer the final question?
There are those types of investors and those types of investors. Venture capitalists mostly will look at finance, but you will find some that have a very good, understanding also what is better for the world. You have venture philanthropists that are people that have made their money, they're now invested in good things. They focus on certain aspects, bettering the world, so you can look at that. And otherwise, it's really about the alignment of interest that's been talked about. I mean, you are an entrepreneur. As an entrepreneur, you don't have to go with any VC. You can test them, you can have a due diligence, you can tell them, come to my house, eat with my wife and my children, meet my family, I want to meet yours, and I decide if you're good enough or not. But because you're the one who wants something, you're less likely to be pushy in that area. But maybe this is something you should try. I've personally worked with business angels that I think should be called business devils. But they're business angels, They destroy the company for their personal profit. The company survives fine, but it could have done much, much more, And you can say the same about some venture capitalists, If you look at a fund portfolio of 15 companies that they have, how many survive? In Europe, it's maybe 8. In the US, it's maybe 5. What happens to the other ones? They just didn't grow fast enough to be still interesting for the VC, so there's no follow-up investment. What is the entrepreneur supposed to do? Many of them go bankrupt because they are initially overfunded to have a high growth spurt, and then the next round of funding stays out and they have to close shop. So it's also about what you are willing to do and where you want to go, and you have to find the right investors.
Okay, we're actually out of time now, so let's conclude with final thoughts, 30 seconds, each one of you, specifically on what you would advise to founders who are looking at all of these options to access financial capital, and if you have any words of wisdom, please share them.
Take your time, start slowly. Depends on which business you are in, business to business, business to consumer. If you have a product, maybe do a reward-based crowdfunding campaign to see if there's demand for your product. If it works out well, maybe you find a business angel who would say, I support you. Maybe you find a venture capitalist. There's lots of examples. Maybe you will also find that that's the wrong approach and you should go straight to a different investor. So I think just look at all of them, look at what business you are, what your growth ambitions are, and what stage of development you are in. You will not get a round from a large venture capital fund if you just have an idea. So then you might have to develop that. Certainly not in Europe. In the US it might be different. Yeah, but if you have a business that's already going, you have different requirements, then maybe crowdfunding isn't right now the right option for you anymore, yeah? So.
Francesca, 30 seconds.
Yes, two very short messages. Being investor ready before talking with an investor, and don't talk with strangers. It means you have to talk with the right investors, otherwise you are wasting time. So try to choose your investor in advance and choose it carefully.
Thank you, Esther.
Remember that you always have a choice. Don't be afraid to fail. If something goes badly, you can always make the other choice and start over. If you're scared of failing, you'll never do anything.
Thank you, Esther. Kirill.
Today's discussion proved me one more that we made right steps, and despite the fact we have good expertise in classical lending, we have a lot of problems, and we have a lot to do in order to be more effective to help our entrepreneur to attract investment on their first steps.
Thank you. Shahab?
It is an excellent time to be an entrepreneur, I think, relatively. But I would say that, get into entrepreneurship for the right reasons. There's a lot of sensationalism out there about, making money easily, and it's just really, really hard work. And if you do, expend, as much or more attention on your founding team as you spend on figuring out how to fund the company.
Excellent. And last but not least, Aidar.
You should reflect on, do you really need money? And then, do you really need external money? And then look at the bench of investors, understand who can give you this money. And then meet with as many investors as possible until you understand whether you get it or not.
Well, I would like to thank you all for coming today, and thank you especially to our panelists.
Thank you.
And let's give them a round of applause, please.